Okay, Mark Matthews is with us now, needs no introduction. Mark, great to have you with us here. Appreciate your time on CNBC-TV18. We're speaking after a while, and there have been two big developments, one local, which is state election results, and of course the full Fed pivot in that sense. And it's kind of really turbocharged markets. And it's not just India, although India is really top of the pack in terms of returns, etc. But other asset classes, the dollar is down. Yields are the 10-year is under 4% now. What next, Mark? I mean, are we looking at a sustained risk-on rally into the end of the year and into next year as well?
I wouldn't have said so a week ago because I thought after such a strong November, we should rest in December. But there's an old saying among farmers, make hay while the sun shines. And we've had two very good pieces of news for the market, as you say. I think, therefore, it can rally into the end of the year. And if it doesn't rally into the end of the year, I think January is going to be good anyway. There's not a lot to be bearish on at this point in the world. And on top of that, the icing on the cake is that stocks are generally not expensive. So the answer to your question is yes.
Mark, hi, good morning. I know you've been a perennial bull on the Indian markets largely for the last couple of years. And in fact, this year has been very good for India. But do you think we can do an encore in 2024? And can the returns be as good for a market like India?
Sonia, the short answer is yes. Number one, I don't think the market is expensive. It's in line with its long-term valuations. And number two, the earnings growth next year will be double-digit. You were talking about rates. I was eavesdropping on your conversation. And so if rates are coming down as well, it's very difficult to see stocks falling in that kind of environment. I think we could repeat 2013 and, sorry, showing my age, 2023 and 2024.
Hi, Mark. Good morning. Mark, the Indian markets are looking up. As you said, we have everything going for us, right? Crude oil is not moving up. Earnings growth is out here. We got a stable government. And now the Fed, well, it delivered as well. From the Indian market perspective itself, what do you like? Are banks on your radar? What would you do with IT?
Banks have been on our radar since the NPAs bottomed, which I guess was already a couple of years ago. And we remain constructive on banks for the simple reason that there is clearly not enough capacity in the manufacturing sector and in the economy in general. And on top of that, very robust residential real estate market, commercial real estate market, infrastructure spend. So all of those require financing. Banks provide the financing to those sectors and to the economy broadly. So I would stick with the banks. And then beyond that, we've had a preference for the materials on the back of, as I mentioned earlier, the robust real estate market and the increased infrastructure spending. And pharmaceuticals as well, on the idea that a lot of the patents are expiring and becoming generic in America.
All right, Mark, we'll leave it there. Great speaking with you as always and getting a big picture perspective on what the markets are likely to do. The answer to the question, can markets go up a lot more, is, I think as you put it unambiguously, yes. Thank you for joining us here on Bazaar Morning Call.